show that gets you India's best property deals. Well, clearly the last couple of weeks have been rather rough. With the Dubai crisis, of course, there was a lot of anxiety in the air that it's going to affect the Indian realty market as well. But developers have so far managed to put up a brave front. We caught up with Pradeep Jain of Parsvnath, who says that India is going to remain relatively unaffected by the Dubai crisis, and in fact, the price correction that the Dubai market is going to experience is not going to spill over to the Indian market, and prices are only expected to go up. You have said that Parsvnath has not invested in Dubai, has no relation to Dubai. And Indian companies so far have managed to put up a brave front where the crisis in Dubai is concerned. But overall, do you see an impact on the Indian realty market, considering there are a lot of complex that developers have been working on which are specifically targeted towards NRIs? And there's a lot of money that comes in from there, a lot of investors come in from there. There are companies, Dubai-based companies, that want to partner with Indian companies through the SPV route. So do we see a fallout of that kind of nature on the sector?
I don't foresee any concern or any fallout because of Dubai in India. The Indian market is entirely different than Dubai. The Dubai market entirely depends on outsider business. In Dubai, there is no domestic demand. The domestic demand is very, very low. They are more dependent on the UK, US and the other part of the world. As against in India, we have our own domestic demand.
There are reports that we've been reading that there's going to be a price correction that's going to happen, a substantial amount of price correction that's going to happen in Dubai. Do we see that spilling over to the Indian realty market?
After the subprime crisis, about 15 months from now, in India, the price already corrected and now start moving up on location and city to city basis. And I don't foresee any further correction in Indian real estate prices and any concern out of Dubai in India, because the relationship between Dubai and India, I don't foresee any synergy into that.
But there is an opinion out there which says that the developers are once again jumping the gun. The sense of recovery, there's a lot of exuberance out there, but the recovery on the ground is not as substantial to merit an increase in prices. There's a report that came out which shows that there is again an oversupply of affordable housing and there aren't as many buyers out there. So how would you rationalize that?
I fully agree. Some of the developers, they are little aggressive to increase price. As industry association, we are requesting to our developer, you need to look at your own cash flow, on demand, and accordingly play or to address your price increment. Related to oversupply in affordable housing, I am fully, not agree with you, because the affordable housing demand is very, very large on city basis. More than 30-35 million houses we are in shortage, and the affordable housing just started, again by the developer in last 3 to 6 months.
Coming back to the recovery that we are seeing in the realty sector, about, say, a broad assessment of the 25 listed companies show that recovery has been painfully slow. So what were your home sales like, and going forward, how much, by what percentage, or by what margins do we see those sales picking up?
And going forward, it looks difficult to give you the percentage terms, but definitely you can see going forward on quarter basis a good growth. Our company as well as into the other companies as well.
Okay, so how many, if you could give me an approximate number as to how many homes could you sell in the September quarter?
On quarter basis, the new sale, what we look at it, around 15 to 20% on quarter basis increase in numbers of the new sales, what I'm talking about.
And now that RBI has increased provisioning for loans that are given out to the real estate sector, has borrowing become more expensive for you, and has it become harder? Do you get a sense that banks are once again tightening their purse strings, and which is why you had to go for a QIP and you're going to PE investors as well?
Yes, the liquidity through the debt side is difficult after increased liquidity. And yes, to become a little expensive. And the more concern is the liquidity than the cost at this point of time.
You raised about 168 crores through a QIP very recently. How much of that was used to retire debt, and how much of that was really used to, how much of that was plowed back into ongoing projects?
See, out of the 168 crore rupees, around 70% money we utilize for repayment of our existing debt, and 30% we use for strengthening our ongoing projects and business.
So what's your debt situation looking like right now?
Right now, our debt situation is about debt equity ratio about 0.75, and cost of debt is about 13.25 or 13.3%.
Okay, so from 1,600 crores, that's the debt that you have.
Yeah, around 15 odd crore now we have.
1,500 crores approximately. And you were talking about, looking at PE investors. Is that a route that we see you taking, selling stakes to PE funds and getting in money to finish projects? We've seen you do that with 2 projects in the NCR region. If you could tell us which projects are they, those that would be great. And is that a strategy that we see you following going forward?
See, yes, we are bringing the FDI investor, PE investor in our project, as very recently we did in our Plato-Pican project in Delhi. On first tranche, we sold 18% equity in 90 crore rupees. And in the same project, the second tranche, we sold 4% equity in 25 crore rupees. The basic idea to bring down the investor not only for the purpose of to finish the project or any pain to complete that project. The basic thing is to, de-risk or unlock the valuation of the project.
Okay, so do we see you doing that for Exotica as well, your flagship project, which is running years behind schedule?
See, the Exotica project, yes, very great project. Because of the slowdown, yes, little bit delay into that. And related to the equity investment in Exotica or any other project, it's an ongoing process.
Also, what's the kind of uptake in demand that you've seen in the residential segment and in the commercial segment?
See, in commercial, still there is a pain. I think it will take 6, 9 or 12 months maybe. But related to the home side, substantial improvement on month-on-month basis. Particularly affordable and mid-size of the apartments. In luxury, yes, the demand starts coming up, but not as it was.
So now that mid and affordable homes are getting sold faster, do we see prices in those 2 segments also creeping back up faster than, say, the luxury segment?
Yes.
Okay. And the quantum of the increase would also be higher?
Oh, yes, substantially higher.
Okay, so when you say prices will increase, can we get a sense by what percentage?
What I foresee, I think in next 3 to 6 months, the price across affordable increase between 10 to 15%.
Okay, and mid-income? More than that or less?
And into the mid-income and the luxury, I think around 10%.
Okay. Also, like you said, that business is yet to pick up on the commercial side, but yet you've announced very ambitious plans in the retail sector. Are those plans on track?
Retail, if you are talking about the retail merchandise, yes, completely on hold. We are not working on that.
Okay.
We are focusing only towards the real estate business at this point of time. Whatever with the expansion, all expansion we put on hold.
So your JV with Carrefour and your 56 hypermarkets and all of that is on hold, right?
Well, it was media-generated news on the street. I never say with Carrefour or with any other retailer.
Okay, so retail is on hold for now. All right. Thank you so much, Mr. Jain, for talking to us.